Hi everyone, it's Alex Sparks here from Sparks Finance and I'm your local mortgage broker. Today's video is which bank should I go with? Now this question comes up quite a bit, but it really is how long's a piece of string? This really comes down to your specific circumstances, your specific needs and your specific goals. Now as a mortgage broker I have access to over 30 different lenders and they all have different policies and all that kind of stuff. So I'm going to go through a couple of different things to consider when we're choosing a lender to make sure that you guys understand how different the banks are and when it comes to our recommendations, why we choose certain ones over the others based on your specific goals and needs. So the first thing to look at is all banks have different policies. Okay, so depending on your specific circumstances might require your need to go with one bank over another. So for example, if you just are in a new job and you've been in that job for only 1 month, one bank might, like a Choicelend for example, might allow you to show 2 payslips in that new role as a permanent employee in that company. They might only require 2 payslips for you to be able to get a loan. Whereas someone like CommBank might require you to be in that role for 6 months before they can consider you to get a loan. So in that instance, if you came to us, we may look at a lender that only requires a short time in employment, short time to evidence you in being in that employment, so we can get that loan approved. So policy comes down to it. So that can be anything from the amount of deposit, the time in your employment. So many different things can come into that. But by choosing a lender specifically for your circumstances is the most important thing to make sure we can get that approved and get you in the property that you want to. The next thing to have a look at is all lenders have different products and they all work differently. Okay, so when we look at different loan accounts, we could be looking at loan accounts with offset accounts. Some of them have offset accounts of 100%, so all of the money in the offset account will be offset against the loan, whereas some only do 50%. Or some don't even have offset accounts and it's just a basic variable loan with the redraw facility. So depending on how you look at the loan and what you want to achieve with that will point us in the right direction of choosing a product with the lender that is best for you. So once again, it really just comes down to the strategy that you're after, and that's how we pick the loan. So there's no one product that's the best for everyone. All right, it's purely based on everything working together and having access to different products if you choose to have them in the future as well. The next thing to take into consideration with lenders is timeframes. So we've gone through a period of high volume applications. So some lenders blew out to 4 weeks before you could even look at your application. So for example, if you went and found a property and you got an offer accepted and they said we need this to be exchanged on in five days, going with someone like St. George who blew out to 4 weeks wouldn't be benefit to you, even if they had the lower interest rate. So this is where it's us in our recommendations looking at that and saying, well, although St. George might have had the lower interest rate at the time, it won't put you in a position to actually secure that property because you will lose it. So therefore we recommend this lender over here that might be a slightly higher interest rate, but we'll be able to do that in the time frame that you need to be able to secure that property. So once again, another area of where choosing the lender for your circumstances is the most beneficial thing to achieve what you want to achieve. And the last one there is obviously interest rates. All right, so we need to have a look at the total cost of that loan over a period of time to determine which lender you should go with. Some lenders have higher interest rates than others in certain areas. There might be different specials available for you to get that lower rate. There might be refinance offers that we could look at. But by looking at interest rates, just by looking at the rate, isn't a true reflection on how much that might cost and which lender you should go with. So for example, if we're looking at a loan that might be 4.19 compared to one that might be 4.24, the one that's 4.24 might be cheaper over the life of that loan because the one at 4.9 might have high annual fees or high monthly fees or high establishment fee. All of these type of things brokers take into consideration to make sure that you're going with the right lender and getting the right product for you. So, with all of these different things, policies, products, time frame, interest rates, and so many other things we take into consideration. Now, this is the benefit of going with a mortgage broker over a bank. All the things I've just discussed there, if you were just to walk into CommBank, and be anywhere outside of their specific policy or their interest rate might not be competitive, it's not the right loan for you. So that's why it's so important to go to an experienced expert mortgage broker so they can look at the entire market and make sure that they can position you with a lender that matches your needs and goals, and also achieves an interest rate and achieves exactly what you want to do in purchasing a home or refinance or whatever that might be. So I can't stress enough the importance of making sure that you're getting a tailored solution for you. If you ever want to have a chat about getting a home loan or going through a discovery session to see what the best option is for you, please don't hesitate to get in contact with us. We can sit down and make sure that you have the best home loan for you and the right lender to match what you guys want to achieve. Thank you.